How is Bitcoin's price determined? We all care about the price of Bitcoin, priced in USD and all of that. And maybe some of us don't really recognize and realize how a market is made. And in this video, I'm going to show you with some really cool graphics that are in real time. And we're going to talk about how the price of Bitcoin is determined. My name is Forrest Hoddle on X and Nostr. I'm a Bitcoin coach. If you want to book me for some one-on-one help, there's a link in the description. I can help you with security needs, best practices, inheritance, what have you. All of that is in the description. This is the Bitcoin USDT, or the Tether trading pair. You can also do Bitcoin to USD. We'll take a look at both of those. And this is the combination of two different exchanges. And right here, this is an order book. So this is showing you right here where this dip is where the price of Bitcoin is on these two exchanges. So there's all sorts of different things we'll get into. But first off, what this shows is all these prices here have this amount of Bitcoin. So if you look at 84,700. There's the total quantity between these two exchanges, OKX and Binance. There's 79 Bitcoin at that price being bought. And on this red side here, you can go up and you can see at the price of 84,770, there's 58 Bitcoin being sold. So all price is the last buy and the last sell in a given exchange. So in a given market. And that is what determines the active price. So for the price to rise, basically all of these sellers here need to run out. All of these sellers, all of this Bitcoin needs to be bought before price can rise. And then price again is determined on the margin of the last buy and the last sell at a given price that people are accepting at. Now, what's interesting here is this is for the average of two exchanges, and exchanges will have slight variance in their price that they're willing to sell at, and that's because it is two different markets. Now, those two things can be very, very close, and that's because of exchange arbitrage. Say OKX, the market was being made and the price was significantly higher. It was being bought, and Bitcoin was being bought and sold at 84,780. What would happen is people would go on Binance and buy a ton of Bitcoin, which would raise the price up on Binance, and then they would sell that same Bitcoin. They would go on to OKX and sell that Bitcoin, which would bring supply of Bitcoin at their price down, and those two things would meet. So there's arbitragers that buy from a cheaper exchange and sell on a more expensive exchange, and those things level out. And all of that happens so much and so quickly and at such large scale that the prices are fairly even from exchange to exchange. Now let's take a look here at BTC USD. These are some different exchanges. It looks like Kraken. I don't know what this green leaf is here. Kraken and Coinbase and things like that. And you can see, again, maybe less, there's less trading pairs going on. There's less amount of Bitcoin in these, on this heat map, on this order book. I don't know how accurate all of this is, but it's a great visual to show you. And then of course, if we go to ETH and USDT, there's a whole bunch of people willing to buy, I guess, down here. I don't know why. And these are all the sellers here. Not sure why anybody would want that amount of ETH. Anyway, so that is basically showing what is going on here. And this is a highly liquid market showing all of the available Bitcoin at available prices. People put in limit orders, limit buys, and this is just showing basically at what price people are willing to buy and willing to sell. So every market is like this. This isn't just the Bitcoin market. So all markets are determined by supply and demand dynamic. If demand increases, if there's more buyers, then price goes up to find new sellers. And then if new sellers come into the market, that drives prices down until it finds new buyers, right? And it's always moving up and down. That's why there's so much movement in markets. So what's interesting about Bitcoin is if the price goes up higher, there's no way to create more Bitcoin. So it doesn't necessarily, I mean, there is new Bitcoin being issued, but it's at a very fixed rate, and that can be calculated in very easily. Now, however, if you have a commodity and there's the ability of a producer to create more of it, or even if there's a company with a huge amount of demand, a huge price appreciation, that company could issue more stock and lower the price and provide stock to those buyers, those willing buyers, and create more supply, and therefore match the demand and lower the price. Now with Bitcoin, we do not have that. We have a fixed supply because of the timed amount of blocks and the release of Bitcoin per block, and the difficulty adjustment accounting for the fact that if more Bitcoin miners come onto the network, the amount of Bitcoin isn't released more, because every 14 days roughly, the difficulty adjustment makes it so that the average block is found every 10 minutes. So this is unlike anything that's ever existed before, and in my opinion, that has ever existed since, because all of the other cryptos out there can get changed. But Bitcoin has it baked in that there's 21 million, there's a max supply, and there's a fixed issuance. It doesn't have the monetary changes like ETH does, which is the second biggest cryptocurrency out there. So, actually, every roughly 4 years, there's also half as much Bitcoin being released. Historically, that's been a cause for a price rise, because that has been a supply shock, because there's half as much new Bitcoin being issued. So it's simple supply and demand economics that creates price, and Bitcoin has the best technical structure built into it, unlike anything else, for the only variable to be for the price to rise, to create more sellers into the market for the demand that is increasing. So unlike a different asset where more supply can be created, in that way, Bitcoin is very well suited. So let's talk a little bit about the arbitrage that can happen. There's been a couple really cool examples. There's something called the kimchi premium, which is referring to the fact that in South Korea, sometimes there can be a premium. So just as I said, OKX and Binance, they have a really low spread or a very close correlation to their market price because of arbitrage. Well, sometimes there can be markets and exchanges where it's very difficult to do that arbitrage because of currency controls, because you have to be in a certain location. And so there might be premiums, right? Like the kimchi premium. Bitcoin might cost more in South Korea because of the inability to arbitrage with the rest of the globe as efficiently, which causes a premium for the South Korean population. Same with Nigeria, where there's really strict currency controls, limited access to dollars. There's been all sorts of crypto companies being kicked out, banks not being allowed, like TradFi banks not being allowed to facilitate the movement of money to crypto exchanges. And so locals within Nigeria pay a lot more for BTC than the rest of the people around the world. So there's a high premium on it, and a lot of how they actually get their Bitcoin is peer-to-peer. They actually buy it directly, not through exchanges, or they get it through remittances. So that's another way to get it. They work remotely for people around the world. So there can be some arbitrage moments still. Supposedly, FTX or Sam Bankman-Fried, part of his come up was doing an arbitrage trade of Bitcoin to Japan, and somehow doing that, I don't know, probably just more of his fake lies and that he likes to spread around. Maybe that was supposed to give him clout. Who knows? But anyway, this has been how Bitcoin's price is determined every single moment of every single day. It's from trading pairs, people buying, people selling, and the markets arbitraging the price between the different exchanges to give a fairly accurate and even price at any given moment, because that is just who is willing to sell their coins and who is willing to buy their coins. Thanks everyone for watching. If you guys do want to get yourself some Bitcoin, I recommend checking out Bitcoin Well. They're a non-custodial exchange, which means when you send them fiat, they send you Bitcoin directly, so you don't open yourself up to third-party counterparty risk. And if you want to book me, you can do so with the third link in the description and book me for a one-on-one coaching, Bitcoin security, anything that you need Bitcoin related, I can help you with. And third thing here, if you want to preserve your seed phrase for generations to come, I recommend checking out Stampseed Titanium Seed Plate Kit and using my code BTC-NOT-CRYPTO-15, and the link for that is in the description as well. Thanks everyone for watching. We'll see you on the next episode of Bitcoin Not Crypto.